This is Rick Rule for Rule Investment Media, the sponsors of the Natural Resource Investment Symposium in Boca Raton, Florida. Also, a keynote speaker at the Mining Journal Mining Select Conference in London, England. I'm delighted that our next interviewer will be exhibiting both at the Mining Journal Conference, July 1 and 2 in London, and also at our Natural Resources Investment Symposium in Boca Raton, Florida, July 7th through 11th. The point of this interview is that attendees at both conferences will have access to more information during the conferences than they can possibly absorb. We're trying to do a series of pre-conference interviews with the exhibitors so that attendees can reach out to the exhibitors before the conference and during the conference and allocate both their time and capital at the conference more efficiently. Please note that at my conference, at least, every public company exhibitor is owned in my own accounts, which is to say every public company exhibitor has been vetted. Notice that both conferences will be recorded so that attendees to the conferences will have the ability to absorb information during the conference, but importantly, after the conference as well. To that end, we're interviewing exhibitor CEOs before the conference in order to familiarize our attendees with the companies and allow them to use their time more efficiently. I'd like to introduce now Mr. Hayden Locke, CEO of Marimaca Copper Company. Hayden, first of all, thank you for your efforts on behalf of shareholders, myself, of course, included. And thank you, too, for your sponsorship both of the Mining Journal Mining Select Conference in London and the Natural Resources Investment Symposium at Boca Raton, Florida.
Thanks very much, Rick. We're very excited to be a part of it and looking forward to getting there.
Let's talk about your credibility as a spokesperson first. Tell me something about your background. Tell me something about the background of your key officers and directors and why we should care about what you're doing in the copper business in Chile.
Yeah. Well, first, a little bit about my history. You may not remember, but you actually invested in a little gold company that I was a very early employee of called Papillon Resources back in 2010, 2011.
The smile is evident.
We,
Thank you.
yes, the smile is evident, and you gave me the amazing catchphrase of "Don't snatch defeat from the jaws of victory" as we held onto our B2 Gold shares for several years after they acquired that asset and turned it into one of the best gold mines in West Africa. So I have had a taste of success, and I see a lot of similarities for this project, and that's echoed by some of our directors on our board. One example of those directors is Clive Newell, who's a founder of First Quantum Minerals. He's made the comment to me several times that this is an asset which reminds him of the asset on which they started the First Quantum journey, and that's something we would like to replicate. We've recently had a new joiner on our board, John Carlo Bruno, who until recently was the CEO of Mantos Copper, which merged with Capstone to create the new Capstone Copper. So we are assembling very slowly a board which has the experience and the management team that has the experience of going through this process, and we're excited about the market that we're potentially developing an asset into.
To be included in the Mining Journal's Mining Select list of high-quality development stage properties around the world is a very, very high honor. In particular, to be selected as part of the top quartile of that list is a particularly high honor. Tell me something about this project. Give me sort of a project overview.
In terms of the copper space, it's a very unique project. Unusually, it's an all oxide, all leachable project, open pittable at surface, very low strip ratio, solid metallurgy. But I think what really sets it apart is its location. It is in the low coastal Cordillera of Chile, about 25 kilometers from a port. It has all of the infrastructure required to develop a mining project right on its doorstep. And this really manifests itself in two ways for our project. Firstly, in the execution risk of bringing this large-scale industrial project into life. But second, and more importantly in my mind, is the upfront capital cost to get into production going to be industry-leading for new copper projects globally. And I don't say that lightly, but we're very confident it will be one of only a small handful of projects with capital intensity under $10,000 per tonne of copper produced once we deliver our definitive feasibility study. And then strong operating costs will really put us once again at the top, we hope, of the Mining Journal Select list of companies.
Let's go a bit deeper in that. Because I've spent so many years in Chile, I understand the importance of being close to the port rather than in the high Andes. Many of Chile's famous copper deposits are, while important, less conveniently located. If you could talk about the infrastructure advantages and the advantages with regards, say, to access to water and access to shipping. Talk to us some more about the advantages of being in the coast, and tell us uh, some more about the capital cost advantages associated with building a mine where people live, as opposed to up
Yeah,
in llama country.
yeah. Well, I think there are numerous benefits to it, not least is the distance that your equipment has to travel from the point of entry port to your site. We're 25 kilometres, where many of the projects up in the high Andes are several hundred kilometres, and not on lovely tarmac roads like we're used to driving around where we live. These are roads that are cut into the side of mountains. So that's really the first aspect of it. I think then there's general infrastructure around the project. So you already have power lines running north and south of our project area, which have capacity. We are able to extract water from the Bay of Mejillones. We only have to pump it 25 kilometres and to a height above sea level of about 700 metres. To give you an idea of the additional cost, every 1,000 metres of elevation gain in terms of pumping costs is about $1 a tonne more. So when you get up to 4 or 5,000 metres above sea level, your cost of pumping things up and getting those things to site is 5 times what we would be paying outside. So as you can see, the costs add up very, very quickly. I think importantly for us, we'll also be very close to 2 large towns. So there'll be no requirement for us to have people living on site. There's no camp. That's a huge additional cost. People overlook the cost. And in my first outing as a mining executive, I remember vividly being told that the cost per person per day on a camp was between $30 and $50. And if you think you have a team of 1,000 people plus, you're starting to rack up serious amounts of shareholder money very quickly by having people living on site. So those are just a handful of the examples of why being in the location we're in is significantly better than many of our peers and really is a huge benefit for us.
Hayden, tell me more about the current status of the scope of the project. Things like tons, things like grade, things like preliminary economics.
So we have a total leachable resource of about 240 million tonnes at 0.45% total copper. That gives us a total contained resource in a single open pit of a bit over 1 million tonnes of contained copper, 2.2 billion pounds of contained copper. So it's at the smaller end of globally significant, but certainly is tipping over into something where many of the larger producers sit up and take notice of us. I think that's evidenced by the fact that we have Mitsubishi Corp as an investment partner, which is very unusual for a company of our scale and our stage of development. In terms of our preliminary economic assessment, which was done in 2020, it showed industry-leading capital costs to production, sub $300 million. It was for a much smaller project than we're considering now, and very strong operating costs. We delivered, I think the one thing I would like to draw out of that study, rather than focus on those results which are out of date, was that at a $2.50 a pound copper price, we still had an IRR, an internal rate of return of north of 20%, which is incredible in the copper space. There are very few development stage projects that have those kinds of metrics. In terms of looking forward, since that study has come out, we've focused a lot on exploration, and we've more than doubled our resource. So that's the resource I'm referring to now, is the 240 million tonnes. And so when we're looking forward to our definitive feasibility study, we're going to be focused on a 50,000 tonne a year cathode producer. It'll have a reserve life of, we expect somewhere between 13 and 15 years, full mine life of somewhere between 16 and 18 years. And we have a lot of exploration potential around it. But importantly, all of those unique characteristics that drove industry-leading return on invested capital metrics in our studies remain firmly intact.
Let's go a little deeper into this, if we may. In terms of acid-soluble leachable copper, that grade would seem to put you in the best quartile, if not in the best decile, of competing projects around the world. Is that accurate? I'm sure you studied this more deeply than I.
So the grade that I was referring to there is total copper. The acid soluble grade is about 68% of that, so about 0.35%. But the slight nuance of this project is that we have quite a lot of secondary sulfide, which is leachable, which is captured in the cyanidable copper portion. So we would expect to be recovering somewhere between 70 and 75% on average over the life of mine of our total copper. So that puts us about 0.35, 0.37.
It's also worth reiterating the fact that at $2.50 copper, about half the current price, that you had internal rates of return north of 20%. Will, in the feasibility study, you use, I'm assuming you will, copper prices that are closer to current prices? And will you also be able to utilize a resource statement that you suggest is double the resource that was present in 2020?
Yep, exactly. We will use the resource that is the current resource, which is double the resource or virtually double the resource that we had in 2020. The copper price is up for debate. Our view on that is, given we're not in production, we will take probably the long-term consensus and a reflection of what our peers are doing so that we can compare apples to apples and people will be able to see relative to our peers how this project stacks up. And then we'll run sensitivities down to probably $3 and up to $5 so people can see what happens in the downside and what happens in the upside. Because as you know, it is important to be defensive because we're in a volatile market at the end of the day.
And when might this definitive feasibility study be delivered and be available to investors?
So the timeline on delivering the DFS is the end of this year, which means, and then we have to be sure that we can draft the full 43101 document for release. So that will be the key driver of when we can actually release it. In terms of milestones for us this year, we're focused on permitting because that's the key critical path for the development of this project. That will be submitted in the middle of the year, and then we'll turn our full attention to accelerating the definitive feasibility study. And yes, the results will be towards the end of the year.
While this effort is ongoing, is exploration and delineation also ongoing? Is there a possibility for better understanding or growing the deposit?
So the deposit, Marimaca deposit, is very well drilled. There remains a potential for a sulfide extension at depth, which we haven't tested yet. But in terms of our exploration focus, we have an amazing exploration team led by Sergio Rivera, who's something of a legend in the Chilean industry. We have several targets that we would like to focus on for the second half of this year. We're doing some early work now, and hopefully we'll delineate some drill-ready targets. Two in particular are quite exciting for me, and I look forward to hopefully having an update for your investors when we're at the symposium.
Well timed. Uh, Tell us something about the market capitalization of Marimaca. How much does one pay for exposure to this asset?
So our current share price is around the $4 Canadian mark, which would give us a fully diluted market cap of about 400 million Canadian. We have between 15 and $20 million still on the balance sheet, so we're pretty well financed. So an EV of 380. So it is a relatively full valuation considering a junior, but I think it really reflects that this asset is outstanding and has really, I think the market has not yet been able to appreciate the benefit of the doubling of that resource and the increased potential scale that we're going to take.
You mentioned too an arrangement with Mitsubishi. If you could discuss that.
So about 18 months ago, 2 years ago, we were obviously in a very different market for copper, and we were looking at how we finance the next phase of our development. And we had a long engagement with Mitsubishi, and through that due diligence process, which took us 18 months, and as you can imagine, the Japanese are very, very diligent with their due diligence. We came to an agreement that they would make what for them is a very unusual investment. As you would know, Mitsubishi Corp is an investor in largely only the largest tier one assets in Latin America. So we're talking Escondida, Los Bronces, Escondida being the largest copper mine in the world, Los Bronces owned by Anglo American and the Anglo American Sur. So it was an unusual investment, and I think it really reflects quality of the asset, but also the quality of the technical work done by our team. And so the structure of that investment was they took a 5% stake at that point at about a 15% premium to our share price. And then so that was $4.30 a share, so a slight premium to where we are today. And then they have an option to increase their shareholding to 9.5%, $5.60 a share. I think it gives a reflection of their view on the value of this.
And no project interest.
No project interest. They would have liked to have had a project interest, but we figured that given the quality of the asset, we were in a position to negotiate quite hard.
In addition to having Mitsubishi on the roster, you have a fairly impressive shareholder roster. If you could talk to us about some of the shareholders, those that you have leave to talk about, so that people can understand the level of due diligence that investors have done on your company and on your assets.
Yeah, we have a register that is dominated by institutional shareholders, in particular private equity funds, who have been with the company for a long time and tend to be very hands-on in their management of their investments. The largest investor is Greenstone, which is a mining private equity fund out of London. They own 27% in their second fund. Another private equity fund called Tembo Resources, also out of London, owns 11%. And then there is a large institutional account called Itaki, which is a new fund that's been founded by a former generalist fund manager in the UK who also owns about 12%. So, and then behind that we have numerous high net worths, which I'm sure many of them wouldn't like to be named, so I won't do it, but they'll be very familiar to you, Rick. I'm sure you've invested in many things with them, and they're all been very supportive over the last years.
Hayden, I'm delighted to have you with us. I'm delighted, too, to have you at the Mining Journal Conference, where I will be the co-host. As a reminder to people watching this video, Hayden will be available at the Mining Journal Mining Select Conference in London, July 1st and 2nd, and at the Natural Resources Investment Symposium in Boca Raton, Florida, July 7th through 11th. The purpose of this interview, of course, is to introduce you to the CEOs of exhibitors at these conferences so that you can learn more about the companies. Further to that, Hayden, if you could tell our listeners who in particular at Marimaca they can reach out to learn more about the company and how they might reach that person.
So it's myself, Rick. I am potentially throwing myself under the bus as a CEO and opening myself up, but I tend to enjoy the engagement with investors. So it's myself and our head of corporate development, Nico Cookson. Both of us are available by email, which we will, I guess, provide in some way in the edit of this video.
Hayden, I look forward to hosting you both in London and in Boca Raton. Thank you for your ongoing efforts and support of shareholders, including this shareholder, going back all the way to Papillon, which was a very, very happy memory. And thank you, too, for your ongoing support of investor education, both at the Mining Select Conference in London, July 1st and 2nd, and the Natural Resource Investment Symposium, July 7th through 11th in Boca Raton, Florida. Hayden, one more time, thank you for your sponsorship.
Thanks very much, Rick.